What will that do to a highly indebted global system where debt last year was over 340 trillion? So we then have putting it bluntly, we will have crashing equity markets, rolling recessions, if not depression. The moral is play the cycle and don't look for long-term investment, with the one exception, of course, being gold.
As geopolitical tensions and sovereign debt concerns escalate, commodities are becoming the last bastion of safety for global capital. Japan's 30-year government bond yield recently reached a record 3.4%, while Germany's 30-year government bond yield surged by 12 basis points, clear signs of growing concern over sovereign debt sustainability. Meanwhile, the U.S. faces unprecedented scrutiny over its $36 trillion national debt and worsening fiscal deficits, casting doubt on the safety of dollar-denominated assets. Global debt has surged to a record $324 trillion in the first quarter of 2025, driven by increased borrowing in countries like China, France, and Germany. This massive debt load raises questions about the ability of economies to manage higher interest rates and potential financial shocks. The dollar's share of global reserves has decreased from 65% to 58% over the past decade, according to IMF data. 55 nations are adopting non-dollar trade systems, while the BRICS and ASEAN are pushing for currency diversification. Historical data reveals gold's dominance during stagflation, delivering 32.2% annualized returns since 1973, while U.S. stocks fell 11.6%. In 2022, when U.S. CPI inflation peaked at 9%, gold simultaneously breached $2,050, reaffirming its inflation hedging credentials. Simon Hunt advises playing the economic cycle and not counting on long-term investments, except for gold. He has been suggesting for a while that gold will eventually return to the center of the global monetary system. Hunt also points out that China is building gold vaults across BRICS member countries, which suggests that gold will likely be used as collateral for any future currency introduced by the BRICS group. We're about to explore the video, but first be sure to subscribe and click the bell icon to stay up to date with our latest uploads. Your feedback in the comments is always appreciated.
There is weakness in the global financial system. You can see it in the way that bond yields are rising. We are probably going to see the G7 countries in recession soon and remaining in recession until the early months of next year. China has the ability to recover from any adverse reaction to the tariff war. By the end of this year, we will find that the Fed and other central banks will be stimulating. Trump will be introducing his tax cuts, etc. So starting around second quarter of 2026 will be the beginnings of a global economic recovery, but fueled by rising inflation. That will take us into an 24-month global recovery, but highly inflation. What does that mean to bond prices? 10-year treasuries and their equivalents globally will be yielding over 10%. What will that do to a highly indebted global system where debt last year was over 340 trillion? So putting it bluntly, we will have crashing equity markets, rolling recessions, if not depression, for 4 to 5 years.
Grim,
so
but
the moral is play the cycle and don't look for long-term investment. With the one exception, of course, the wonderful annual In Gold We Trust came out the other day, and in gold we continue to trust. I've been hinting how gold is going to come back into the monetary system when I spoke about China establishing gold vaults in many members and partner members' countries. Gold will be used as the collateral to whatever currency BRICS comes out with.
The BRICS Plus grouping has witnessed an expansion in recent years. In 2024, 5 countries, Egypt, Ethiopia, Iran, Saudi Arabia, and the United Arab Emirates, were granted membership in BRICS. In January 2025, Indonesia was awarded membership in the BRICS Plus group. It is worth noting that Saudi Arabia has yet to join BRICS Plus formally. While the U.S. President Donald Trump issued warnings to BRICS member states that he would impose sanctions if they sought to undermine the dollar, Trump warned BRICS member states that if they did so, they will face 100% tariffs and should expect to say goodbye to selling into the wonderful U.S. economy. One significant sign of this shift is that the Shanghai Gold Exchange is establishing a gold vault in Saudi Arabia, just as it's doing in other BRICS countries. Simon Hunt pointed out that many Asian countries are interested in joining BRICS, and some have already done so, at least as partner members. He believes we are witnessing the formation of new global alliances that don't include America. Simon said this gold-backed system is likely to spread across BRICS countries, with Saudi Arabia leading the way. In his view, the Gulf nations, including Saudi, are carefully playing both the U.S. and BRICS to protect their interests.
Washington is trying to woo Modi away from BRICS. So, chatting to an Indian friend of mine, I said, how much longer can Modi dance this two-step dance until the moment arrives when he has to make a decision? And maybe that decision will be at the BRICS summit in July in Rio de Janeiro this year. Because at that summit, the work on creating a BRICS currency will probably be ready to be unveiled. But it can only be unveiled if there is a unanimous decision. It would complicate things for BRICS, but what would BRICS do? They'll just tighten their relations within each other. Most of Asian countries would like to join BRICS. Many have already as partner members. You've already starting to see new alliances being created that excludes America. I mean, the first one, so almost immediately after Trump's tariff announcement, was between Japan, South Korea, and China. Three most unlikely bedfellows. They're talking about creating an alliance. You've got other alliances within ASEAN talking together. Would Modi really want to break away from Asia? I'm not so sure. The Gulf countries are playing both sides off against each other. They're buying protection from America, and yet they want to remain on good terms with the BRICS countries. As a sideshow, but pretty central, the Shanghai Gold Exchange is opening a gold vault in Saudi Arabia, as they are in many other BRICS countries. So what does this mean for Saudi? They can sell oil in return for CNY, Chinese currency. If they don't want to hold the Chinese currency, they can convert it into gold that will be sitting in Saudi Arabia. And this is happening in a number of other BRICS countries. It's how Russia and China finance their trade. Russia has a surplus trade with China. That surplus is collateralized by a deposit of gold into the PBOC gold vaults for account Russia. That's effectively what's going to happen across the BRICS countries, with Saudi Arabia being the first. Saudi is definitely playing, well, all the Gulf countries are definitely playing both sides off.
In May 2025, EBC Financial Group reported that several nations were formalizing plans to settle international transactions in their national currencies or through alternative arrangements, such as barter or digital currencies. Developing countries are actively diversifying their foreign exchange reserves by investing in commodities such as gold, oil, and diamonds. This reduces reliance on USD-denominated assets and provides a hedge against currency volatility. As the USD loses some of its hegemony in global finance, developing nations have an opportunity to recalibrate their monetary strategies by strategically diversifying their reserves and managing capital inflows effectively, which has led to currency appreciation. Would you trust a currency more if it was backed by gold instead of being printed by central banks? Share your feedback in the comments below. If you found this helpful video, hit the thumbs up and subscribe to keep up with our latest updates.